gonna have to holler at them, or you want me to?
All right. All right. Good afternoon, everybody. Is everyone hear me all right? Okay. So, my name's Connor. I am the farm loan manager for a office here in Oklahoma. I recognize that we come from all over, so more than likely I will not be your farm loan manager at your office if you were to go in. So what I'm going to do today is I'm going to cover some general information about the programs and kind of go over it, and any type of office specific things we can discuss but not get too into, because we all have the same regulations, but you know, just like cooking with recipes, some people do it a little differently. We've all bit into a slice of carrot cake that had something in it that we wouldn't put in carrot cake, so I appreciate the laugh. So, with FSA, there are two different loan types. There's direct, which would be where FSA would loan directly to the individual or the applicant. That is where you all would be FSA's customer. We right now are operating under program maximums of $600,000 for a farm ownership and $400,000 for an operating loan. You say, Connor, what are those? We'll get into that in a moment. There's guaranteed loans. That is where the bank comes to FSA and asks for a guarantee on a loan that the bank is making to you. A good way to think of that would be like a triangle. You know, FSA, bank, like a triangle. So in that situation, the bank would be FSA's client. And currently the guaranteed loan maximum on that would be $2,251,000. So we go through some metrics here, but so just not much important in the metrics, and they may have changed by now, so we'll just move on. So a beginning farmer. A beginning farmer for FSA's purposes is anyone that has operated a farm for 10 or less years. You might not think at 10 years that you're considered a beginning farmer, but statutorily you still would be. And with that, there's some few guidelines here for how we determine who is a beginning farmer. You know, documentation is really important with this. We can say, hey, I've been assisting, I've been doing X, Y, and Z. But when you go into the office, what we would really like to see is, you know, how we demonstrate that we've done that. Whether that be a Schedule F on tax returns, that's the farming tax return, you know, visiting with writing letters of recommendation from someone that can vouch for your level of management involvement. All those can help go to kind of show what you've been doing. SDA farmers, this is something that DJ and Lisa touched on earlier. Can kind of like a vocab word that when you go into your county office you may hear. Who counts as an SDA borrower is a member who identifies as any one of a socially disadvantaged group, which could be Native Americans, we have the list here, as well as women. Currently, we have top 5 states for SDA borrowers. You can see Oklahoma, Texas, Arkansas, Kentucky, and Puerto Rico. So, types of FSA direct farm loan assistance. Remember, because we have farm loans and then we have operating loans. So, with farm loans, that is something where we will be purchasing a farm or making capital improvements. So, you're thinking, Connor, you know, I'm kidding my goats. And you know what would really make things easier for me would be a barn. So to purchase that barn, or to construct that barn, you would probably be looking at a farm ownership loan. The maximum amount for a farm ownership loan would be $600,000. Now, that does not mean I have a $600,000 request here, and then a year later I do another $600,000 request. That would be the maximum that you can have out at any time. So, once you get an FSA farm ownership loan, you have 10 consecutive years while that loan is outstanding that you can come back and apply for additional FSA assistance for a farm ownership loan and be under $600,000. So If I were to apply for a loan in 2010, I would have until 2020 to come back to FSA for that additional assistance. If you had a farm ownership loan of $400,000 and fell within there, you would have $200,000 of additional loan funds that you could request to come from FSA. We have, this kind of just explains what I was just going over. My apologies. So with the security, it will be a 40-year term. The interest rate will be the interest rate either when the loan is approved or when the loan is closed. FSA's time frames typically range in that 90 to 120 day frame from loan completion, or application completion to closing. So during that time period, as FSA interest rates change monthly, the rate could rise or fall, but you'll always get the lower of the interest rate between those two. So with 100% FSA, that would be where FSA is the only creditor on that, and they would have, first mortgage, take up to 125% security. So if there's any equity in the property you're purchasing, that could go to meet that 125% requirement. Now, we also have joint financing because, that would be where FSA would loan up to half of the purchase price, and another lender would loan at least half of the purchase price. So basically what this is saying here for joint financing, a joint financing request, is FSA cannot loan more than what the other lender would be loaning. So again, we have up to $600,000 on that. Your bank would have a first mortgage with FSA having a second. Again, up to 40 years. No down payment is required. If there is a 5% down payment made on any of the programs, FSA's only security will be a mortgage on what's being purchased. In this case, a second behind the bank. That security component's a big one for a lot of people, just because we don't want to tie up other real estate that we may have. So definitely visit with your office on what it may mean for you on that. No one likes surprises. We don't want to find out that there, might be a mortgage filed on something else that we may own, right? So then we have a down payment option, and this option is for applicants who either are qualifying beginning farmers, so remember, 10 or less years, or members of a SDA group. Now with this, the applicant will put down a 5% down payment. FSA will finance 45% of the loan request. In the lender that's not FSA, your commercial lender will finance the remaining half. Now with this, FSA's term is typically 20 years. This has one of the lowest interest rates of any of the free farm ownership programs, but it has the most aggressive repayment period. So these are kind of three direct options for farm ownership loans that FSA offers. Visit with, if this is something you're considering, visit with the office that you're in. They may have a helpful spreadsheet that can help you weigh what your payment could be, and the pros and cons of each to ultimately find the best loan product for you. So micro, when anytime FSA is referring to something that's a micro, it's going to be $50,000 or less. So a micro farm ownership loan would be $50,000 or less. This could be, since it's a farm ownership loan, to purchase property or to make capital improvements like a barn, shed, something of that nature to help the farm or ranch. 100% security requirement. And here's just some general requirements about this. I have not seen many micro farm ownership loans during the course of my time with FSA. So it's available, but not oftentimes used. Next we go to operating loans. These are loans to purchase or refinance breeding stock, equipment, some fencing, other assorted operating loans for the operation. Now, we have two different types of operating loans. We have term operating loans, which are those, something that has a usable life, typically about 7 years, something that FSA can have a security interest in and it stays there for that period. Or annual operating loans. These are more like a line of credit. Your consumables, your feed, your seed, your fertilizer, fuel, etc. So something that you use, and it can be paid with your kid crop. Your kid crop. So we do have term limits on these as well, and it's 7 years of eligibility. They're not consecutive. So remember how farm ownership, when you buy it, the time starts for 10? This is not like that. So with this one, if you were to close a loan in 2020, and then again in 2024, you've only used 2 years of eligibility. Even though 4 calendar years have passed, you would have only used 2 years in that example. So with these, our maximum for term, remember that's something that's going to be about 7 years, is going to be $400,000, about 7 years, about 125% security margin. But security is something that it's best to visit with your local office on for what that lien might be filed on. So annual operating loans, those are something that we do annually. Again, this is stuff like feed, seed, your consumable products. So we have micro operating loans. Again, micro would be $50,000 or less. Micro operating loans, there's a lot of interesting components of it. For starters, if you fall into the category of beginning or veteran farmer, you have the option to receive a special operating loan rate of 5%. So if that operating loan interest is higher than 5%, you would be saving some money by getting this one. If you're a qualifying farmer, which would be a beginning farmer or a veteran farmer with that micro loan rate. A micro loan can be used to purchase any of the items that a regular operating loan can. I struggle with technology. So, yeah, any questions over that? Oh, we have youth loans as well. This would be someone from 10 to 20 years old. The maximum youth loan amount can be $10,000. Our annual rate is still 1 year. Term is 7. Now with this, they must be recommended and continuously supervised by a project advisor. They have to be in a tribal ag thing, 4-H, an ag teacher, extension agent, parent, just something. We're not just going to give $10,000 to a child running along the street and hope that it, goes to the right product. So they need that supervision, and they need the letter basically stating that. So yeah, eligibility is something that we need to show that, and all of this on here will be in an FSA application, but we just have some basic stuff here that you would certify on your FSA application. Acceptable credit history exhibited by debt repayment. FSA will pull a credit report, and if there are any issues on that credit report, it's possible you'll be asked to explain why we're seeing that or what was the cause of it. We understand life happens.
That was it.
Well, that didn't last very long. Okay, so do we have any questions? Any questions? Yes.
So on the farm, the one where you're trying to buy a farm, like a piece of real estate?
Yes, ma'am. Farm ownership?
Farm ownership, thank you. Is it best to, and it might vary office to office, but is it best to find the land first and then go, or go to FSA and then?
So with this, and in order for an application to be considered complete, you need a signed real estate purchase contract in there. FSA does not pre-approve, which is one of the things that makes it different than a lot of financial institutions. So FSA won't look at it beforehand. Typically, we don't give pre-approvals. It's possible that your office might look at it and have some constructive feedback, but we don't give pre-approvals.
Okay,
So in order to be
you would
complete,
get in line and then go to your FSA office.
exactly, you would need that signed purchase contract, just because we don't work it until it's complete, and to be complete, you need that. So the completion process, let me just walk through that real quick with you. So you turn in an application with FSA. FSA has 5 days to look over it and give you either a notice of complete application or incomplete application. If you're incomplete, on that letter it will spell out what items you need to become complete. You will have 15 calendar days from that time to become complete. If at the end of those 15 days, you will receive a second incomplete notice giving you an additional 15 days. If at the end of that 15 days there are still items incomplete, you will receive a withdrawal notice due to an incomplete application. Once you become incomplete, we can't start your application again without a signed 2001, which is the farm loan application. So you will need to just sign that again and make any corrections that might be needed. It's possible. I had something on here going over the application with us, but apparently that's not going to be something we can look at today. So on that application, you will be asked to provide a balance sheet. If you have a balance sheet that is 90 or less days old that you may have done with the bank, may have just done for fun or for any other reason, you can substitute that in there versus just creating the wheel again. We also have something as FSA is a cash flow lender, so we would ask that you do a typical year cash flow. I know there's no such thing as a typical year, but we ask that we try and imagine one the best possible. So with that, oftentimes we'll look at your past tax returns to try and get an informed idea of what that would be. If we're making any type of drastic changes to our operation, we will also possibly look at any type of cooperative extension data for, herd running 200 head of does would be expected to do X, Y, and Z. So if you're making substantial changes, other reliable data and industry data might be pulled. I know a lot of us here are seed stock producers, so we're not selling our goats for whatever dollar a pound. We want X, Y, and Z because we have that history. So with a lot of the seed stock operations that I've worked with in the past, we would encourage you to bring in your sales receipts. You'd say, hey, I sold this doe right here for $5,000 at this sale. Here's the documentation for it. I sold this buck for $2,500. Here is this, so that we can work with you and get hopefully a more realistic price than what pound price may be for your animal. I know that's probably something that I know farm programs, when they were up here, that's something that they're at that market price. But with us, if you have that demonstrated history of saying, hey, I've had X, Y, and Z, here's my receipts, we can kind of work with you to get that into a more realistic price.
Is there any stipulations on the piece of property? Because I know some banks or loan programs or whatever won't approve you for anything that like I know one time I was looking at one that was like it had to have a house on it. It couldn't just be land.
So with FSA, it needs to have legal access for the mortgage. That's one of the requirements because we can't loan on something that doesn't have a deeded access, whether that be an easement or anything like that. There isn't a requirement on having a residence versus not having a residence on there. One of the big things is proportionality. There is something in our handbook that says, I keep pointing because I'm used to my PowerPoint here and turning it to it. But for proportionality, basically the farm ownership loan payment needs to be proportional to the amount of farm income that we have produced. It should be at least 1 to 1. So if your payment is $10,000, you should have about $10,000 in ag product sales. But that's one of those things that it's best to visit with your county office on. It's best to go in to speak with your county office because everyone has their own interpretation on what makes something proportional versus non-proportional. So definitely, if that might not apply to us, we definitely still want to go in and check because it might be something that you can work with. Any other questions? Questions, concerns?
I think we're probably good.
Thank you all for your time, and I hope we have a great sale tomorrow.
Have you got a battery?
I forgot my dead computer.